Today we're discussing investment options for NRIs. Given everything that's happened in our market and the currency rates, should NRIs at this point be revisiting their entire portfolio, maybe re-strategizing? That's what we're going to be asking Dhirendra Kumar, who we're going to bring in right now from our Delhi office. Dhirendra is in our studio. Thank you so much for joining us, Dhirendra. I want to focus on our NRI viewers today and those of you at home who have family who live overseas who are also looking at investing in India. Now, we've had several questions coming in from NRIs asking if they should change their portfolios, given where the currency is, the volatility in our equity and our debt markets of late. Is it a good time? Would you say they should re-evaluate their portfolios altogether?
I don't think so. I think for NRIs, broadly there are one can divide that the investment based on the time frame. And if you are investing for next 2 or 3 years, and you definitely need that money back, so I think your approach, you should not be an investor. You should just be making a deposit, and you should evaluate the hefty return which you'll be getting on any NRI deposits, FCNR deposits. If you're an equity investor, I don't think it matters much. I don't know if the worst is over for the currency. There could still be downside, and as an NRI, bringing your money, your foreign exchange into the country and making it and keeping it rupee denominated puts you at a special disadvantage. But I think if you are still convinced of the India story, if you're a long-term investor, and if India is a small allocation of your otherwise overall portfolio, I think you don't have much to worry about, and anyway you can't do much about it.
Well, Dhirendra, let's split up these questions. Let's talk about equity and debt separately. Equity first. There are lots of mixed voices right now, possibly suggesting that developed markets are better placed than emerging markets like India for performance over the next year or so. Now, for an NRI deciding to split his allocation, maybe between the US stock market and the Indian market, what advice would you give him at this point?
I would say that, for all investors, it's always good to be, when taking exposure to equities, one should be buying great companies wherever they be, and an investor should be buying it cheap. And I think I'm not very sure about, equity assets all over being cheap or being just as cheap as in India. And also, markets turn around when you least expect it. And it's always good to be good to be buying assets or buying equity when they're out of favor, which clearly, the Indian markets may not be very cheap, or but it may not be the worst time to buying Indian equity. So I don't know about a magic formula that where you should be spreading your money, but you should be buying high quality companies and you should be buying it cheap, and they are available based on these two criteria in India as of now.
All right, now let's talk about their debt options. Now for NRIs, do you prefer the NRE deposits that's giving them between 8.75 and 9.25% a year, or should they be looking at debt funds?
No, I think, the kind of return which NRIs get on their deposits today, and the kind of volatility which we have seen on the fixed income and the complete turnaround in the rate outlook for fixed income, that actually makes me think that NRI should be out of fixed income funds altogether. They should not even consider it as an investment today.
All right, be selective about equity and use your NRE deposits. We have a question from one of our viewers. Mahesh has written in. He lives in Dubai, Dhirendra. He's an NRI, obviously. He's been there for the last 44 years. He's considering retiring in India. He's going to be back in the next 2 years. Well, welcome back and come back soon. Now, most of his savings, he tells us, are in banks right now, in savings. He wants to know what he should do with his money once he returns to India. Should he keep it in saving bank accounts, or should he move it to other investment options? What would you recommend he does?
I would say that, till he's there and he has the entitlement of being an NRI, even after he comes back for a while, then he should keep that high-yielding deposit as much as possible. And certainly he should keep as much in deposit that he needs to consume over the next 2-3 years, or how much, the amount, or if he has a sizable accumulation, and if he's getting a decent return on this. He should have it to the extent that if he consumes all of it over the next 2-3 years, he will not be short of money.
Okay, Dhirendra, thanks for joining in. Faith, thanks to you as well.